Hey folks, good afternoon. Steve Federal here, one of the managing partners at fxestrader.com. Welcome to the Monday, June 24th webinar of the footprint. In a nutshell, it's used today by folks that knew how to use it correctly, yielded tons of money, and it was an awesome day for trading at different points using the footprint. So I'm actually going to change up a little bit at the end of this webinar to show you guys some of the live stuff from what took place today. But an excellent day had by all. It's been obviously very volatile in the markets with big changes in global monetary policy and big changes in a lot of these currency pairs. Trading's created pretty serious amount of carry trade unwinding going on in Japan, which has really roiled a lot of the risk on assets around the world. So I'll touch a little bit on that this afternoon as we get through some of this. Just a little housekeeping in the beginning, if I may. I want to do a quick sound check, make sure everybody's hearing me okay. So if you can, please just type in a yes while I'm going through the overview here, which is the next slide. So this is a little bit of the overview of what we're going to cover today. I typically do a poll in the beginning of my webinars. I want to get a gauge for who's traded what and when. In this case, I'd like to know if you have traded using the footprint, or if you haven't, you'd like to learn, please let me know. We're going to try and get you a really good overview of it today. I would highly encourage visiting Market Delta's website to view all the videos and PDF files that they have that exhaustively cover how to read this footprint chart and the patterns that are most important to be able to recognize. I'm going to go through some of the patterns today. Obviously, the key thing here being that it is an inside look of the market, and as a great way to view the order flow. So we're going to define the footprint chart. We're going to go through what the chart looks like, some of the benefits, why it's important to use it to track order flow, which is really anything, everything, I guess I should say. How we can use the footprint chart to frame when to trade. And this is really key right here, because lots of the stuff that's out there in the technical analysis land, charts, indicators, stochastics, oscillators, all that stuff, certainly Fibonacci's, and all the Elliott wave. I mean, a lot of that stuff can certainly teach you where to trade, but it doesn't teach you the when. So I like to use the footprint chart as kind of like my fine tuner. And I'll go through some examples today of that as well. But ultimately the goal is to determine whether the trading activity is drying up, whether it's being facilitated, or increasing in pace in one form of price extreme or another. That is really the bottom line when it comes to understanding the footprint. And then, as I was asked by a couple of folks, I'm actually going to put the consistent profitability chart back up so we can go through some of the steps. And this was something I touched on in my first webinar, but this is the second in a series of 4 we're doing on auction market theory. And this is important, so I'm going to just go through this again. Then I got a little bonus at the end of the presentations. I'm going to show charts of exactly what took place today. And without further ado, a little bit on myself. If you're just joining us, my name is Steve Vetterl. I'm one of the managing partners here at FXES Trader. This is our home page. If you scroll down to the bottom of the page, you can see a little bit of a bio on us and myself. If you want a little more in-depth, what I would suggest is clicking on my LinkedIn button. It can take you right to my profile, so you can read a little bit about my experience. I've spent about 13 years in the industry. More on the last 6 years as a futures trader. I'm also running with one of my partners a private fund that we had formed back in 2006 once we left our previous employer Fisher Investments. Here you can see to start a small long-short fund that we privately trade for some clients. So also with the just the disclaimers, I know a lot of our attorneys are always making sure that you guys understand the disclaimers and so forth. Any of the disclosures. Here's that sheet. Now our attorneys are happy. So if you want to read this, it's on the bottom of the home page, just like the LinkedIn link is, and our testimonials as well. The testimonials go through some of the different stuff that our students have said about us, whether it be on Twitter, or what different websites have reviewed and so forth. So it's pretty good. Got a nice little collection of testimonials putting together. But let's go ahead and get into this, and it's trying to take about an hour today. Go through what's important, what you need to learn, and in my opinion, as far as understanding the footprint chart. So this is my Twitter feed, and I post a lot of stuff related to both market profile and the footprint on Twitter. The beauty of this is I've been on Twitter since 2009. It is a timestamp track record. It's an excellent track record of everything I said. I typically don't post trades on there. I'll give areas where it may be a good idea to take a trade. Albeit the last 4 or 5 days I've gotten a little more outside of the the box, and I've actually posted some trades, and I've been batting 100% the last few days, which has been great. But I often don't take a lot of trades, and we don't in the room. It just depends upon what's going on in the market. So let's do a little bit of discussion of the footprint and get into what this webinar is really about, because I can tell you the people that know how to read this chart absolutely kill it in trading, especially if they're trading with size. And it is not difficult if you have the right tools in place to know where to trade on a particular support and resistance or fib level or some sort of value area high with the profile chart or what have you. The difficulty is when to trade, when to actually pull the trigger and make the execution. Now I'm going to get more into how that gets executed in the different webinars I'm going to have in the future, but this is just going to be an overflow or an overview of the footprint and some of the benefits. So obviously it tracks order flow. You can see that once I go through that, it'll break that all down. There's different types of footprint charts you can view. As you can see here, I use a point and figure, what's called a 5-tick PNF chart. It is in place because it is one of the most successful in seeing, in my opinion, and many of the people that I trade with that use the exact same type of chart and time frame, the best way to see what's going on in any given move in the market, especially with contracts like the 6E or the ES. You can use this on commodities as well if you trade gold or some of the oil traders out there as well. I'm going to focus mostly today on just looking at charts that are showing the ES and what the footprint's doing. So, but the key thing here, in my opinion, is you can execute with greater precision. Obviously, that gives you confidence. If you have the right filters set up, it shows a lot of the noise out there. Most of what I'm going to explain in the footprint chart, I'm not really going to get caught up in looking at every single thing. You really want to just glean certain clues from the use of the footprint throughout any period of trend days up or down. So ultimately this leads to improved transparency. But with that being said, let's go a little bit into the order flow, which is the most important part that the footprint provides. But I feel this is the missing link, I feel this is the missing link for many traders. The executions at any given price and the time and sales screens that traditionally have showed this type of data flowing through, they just move too fast to comprehend. And the data scrolled out, and the one thing I love about the footprint is it diverges radically from traditional price patterns and or indicator-based analysis. So the beauty is it makes no attempt to oversimplify or undersimplify it, nor is the footprint a red, green light type of trade system. So it gives you insight of the comprehension. So in a nutshell, that allows the trader to integrate this data along with current context, because as we know, context is the most important thing broadly to have an idea on. So just keep in mind that the footprint's essentially a graphical or a spreadsheet-like rendition of the most basic and fundamental market-generated data which trading activity produces. So I view that as a very natural way to look at it. And in general, the where to trade is much easier than knowing when to trade, and I think that's the void that the footprint fills. So let's get into a little bit about the footprint. On the left-hand side of this here is the sell orders that are taking place in a given day. So the 0, the 66, the 155. These are all the sell orders that are taking place in a given day. The right-hand side is the buy orders. So essentially it's the the bid versus the offer, or the bid versus the ask, and the particular footprint, depending upon what time frame you're in, will go through and break all of that down. Okay, so let's put some of these examples in practice on what took place today. And as you can see on the footprint here, we're looking at the ES, the September contract, the U contract. The boxes at the bottom show the delta, which is the top line you see here going across. The boxes at the bottom show the daily delta. So you can see how we were moving along here, 25,000 going to climbing up into the mid 26s as far as net delta. And then how this down bar a little bit after 10 a.m. this morning, the New York Open time, really had some significant sell-off. So keep an eye on, when I'm scrolling through this, the delta and both the the daily delta. I am really not going to get too into what all the other stuff is on that at the bottom. Those are the most important ones I pay attention to. The daily delta being the big one. So we opened up the session, came into the 10 a.m. hour. Did a fair amount of chop around the 76 region. This area has been important, as obviously the 71 singles, which got taken out yesterday. We had a little bit of a gap up overnight. But if you take a look at kind of what sort of got us into all of this, we had a number of orders printing up and really nothing going off on either the bid or the ask above. And it's just a great thing about markets, and certainly the footprint chart, because it's telling us that there's really not a lot of anything going off at the top. No orders being executed. And throughout this, you can see the red line here is the VWAP. Really nothing that's telling us anything. These boxes that are outlined in black are what's called a volume node for the particular bar. As you can see, both we have red and green bars. The and just looking at, and let me just turn this toolbar off because I don't like using this. All right, here we go. All right, maybe a little easier to show than having the crosshairs up, but the 0 by 3 by 23, 0 by 3, 140 by 551, that's telling us that just not a lot going off. They're making attempts on it. Bars are showing up, chopping around, so forth. But note, the first time we make a stab down, we have some pretty heavy volume executing on the left-hand side. That, I think, was the first indication that if we were to go back up and get within this sort of chop mini balance range and maybe take a stab higher, maybe say like 1576 and a quarter, certainly anything less than 15, and nothing went off, that's when we were sort of, I don't know, maybe sort of a flag, if you will, here. That would have put me on high alert for a possible sell-off, and man, did we get it. So the footprint really was giving you, hey, if you want to take a short right off the open and just past the 10 a.m. hour New York time, it probably would have been excellent to set it somewhere up here. You could have set your stops somewhere at the 1577, 78 range and had a really good risk-reward potential on this trade. And it paid nice for you. So had you gotten short somewhere in the 76 range, you'd have probably pulled about 6 points out of this best scale if you'd been paying attention. But the beauty, again, of the footprint is that, and sure, if you're looking at a tick chart or any of the NYSE internals, they would have shown that this was a very heavy volume stop run sell-off, but at the same time, it would have also shown you that we came again back towards the 1570 area, all important area from yesterday, because we spent a good chunk of yesterday afternoon above this area. and we formed an unconfirmed single at 1571, which actually consequently got taken out towards the end of yesterday. And here we are again spending time above the single, looking to bounce off it. So 1570 certainly in this particular last 2 days has established itself as a pretty important level to as far as support. So, no surprise we bounced off it. We had many times previous to just the prints that you see here on the chart and went back up again. But the cool thing is watch as we move forward in the market. Watch what happens on the footprint. Again, we're doing another test back up. This was really an example of an unfinished auction in my opinion. So I don't know that I would have taken any shorts on any stab back up at this area, because as soon as we saw this big sell-off, all the stop orders again started piling up around here. So no surprise we spent some time chopping around back in that. I know we had some news releases come out. No surprise that we stabbed back up. But as I continue to move the footprint forward, watch what happens. Here we are back up again, testing the 1576 level. Nothing as far as size going off on either the offer or the bid. And really just a lot of chop. The first really good trade was your first short of the day. Here we go. Okay, so one good thing you always just is when there's not a lot going off here and there's a lot of chop, and we've had a big move up off of the overnight lows, you know that a lot of the inventory coming into this morning was short. So when a lot of the inventory is short, looking at the profile, you really have a pretty good chance of a short squeeze. And we did get that, and you can see where we were printing some pretty big numbers up through here, and so forth. So again, back up to the with nothing really going off at the top. So the indications of a potential reversal here really weren't necessarily showing themselves at the bottom, but they certainly were previous showing it from the top. So let me just continue to scroll forward here. Notice every time, as soon as we zipped up through this area, the black boxes that show the volume nodes in each one of these candles and each one of these individual footprint volumes, every time we came back down to test the area, there was really no selling taking place, and we just continued to bounce back up with a little bit of light folks on the bid. Okay, so spent a fair amount of time balancing in here, especially as far as a shorter term scalp type trader. We bounced above that level, and notice the top bar, or I should say the top print of this particular bar, this 592 by 1794, was the highest volume node of this entire bar. And the fact that it shows that, and it was an incomplete auction in my opinion, meant that if we could get anywhere back down into the 1576 area, I would have definitely taken a long. Oftentimes volume nodes that show up at the end of a particular pattern is a pretty good indication that auction's not complete and that the pattern will probably continue in the direction of that extreme, in this case up. So let's scroll forward. So if somebody went long, you've gotten paid pretty good on this trade. And I guess you're looking at, I guess best scale out somewhere around anywhere between 4 to 5 points, depending on where you're positioned, any of your stops, or just market orders to exit the trade. But the 1582 area has been just a big area. So we went up, saw a lot of volume go off, and then nothing. So it probably could have told you again, especially since we're not looking at all the other support and resistance levels at the market. It's probably an excellent place to take a short. And I posted that on Twitter, saying, hey, maybe a heads up. Looks like a bit of an exhaustion on the footprint. Probably a good area if you were quick enough to get the order in, take a short. And let's see how that panned out. Yeah, you got paid a little bit, about anywhere between 3 to 5 points, depending on how you view that as a scale out. Some people view that as a home run trade. I view a home run trade as 20 points. But looking at, again, the footprints just showing you down here around 77 at the end of these these candles, there's nothing really going off. A little bit of a pretty decent sized sell there. The colors that you see shaded in also show the size of the trade relative to the other. So the heaviest greens and the darkest reds are where more of the volume's taking place on the sell side versus the green, more of the volume taking place on the buy side here, the 1290 as an example. So I'm hoping this gives you guys a better feel for how to read the footprint and looking at different types of things. I hesitate with this particular snapshot that we're looking at of the last day on the footprint. I hesitate to get into a lot of the minutia here in this first webinar because I want you guys to just get a broad feel for how the movements of the footprint take place. Maybe begin to recognize some reversal patterns, some trending patterns that you see here at the bottom, telling us that maybe we'll see a move up. But oftentimes with a lot of my good trader friends that I've converted to the footprint, they spend too much time getting into all of this. And all I'm saying is that just take a couple of hints off of this. Just take a couple of nuggets out of it. Maybe look at the daily delta. Maybe you get a feel for any big changes that are taking place in the daily delta. You know, we're keeping a fairly consistent growth through these numbers, anywhere from, you know, going up from 38 up to 41, down to, you know, 41,000 here, so forth. So it's been pretty consistent. Not really a big tell as far as that. So let's just continue on and see what it shows us. Okay, so nothing going off, just kind of some chop, and not really showing us a lot of aggressive buying or selling in any one particular direction by any of the other time frame players looking for a breakout. Okay, so when we got back up around the top here, the 0 by 107, it was at the top, really again showing nothing going off. I would just bear that most of the stops are probably being placed above 82, 83, and we're probably going to go up and make a stab at those. I don't know that this necessarily would have shown you a short going all the way up to the top, but let's just continue to scroll through. Okay, so let's go ahead and move into the last part of the webinar today, is the 6 key elements to consistent profitability. I have received a number of requests in email from different folks from the first webinar that wanted me to go through this again, maybe in a little more detail, because we were running a little low on time, so I just sort of glazed over it. Number one, I can't put any more emphasis on this than the example of a top professional athlete and the amount of time that he or she puts into training, whether it be somebody that is an international soccer player or somebody that has worked real hard and become an excellent player in the NFL and made the Pro Bowl, to somebody that's a professional sprinter. You know, any of these these folks are absolutely dedicated to what they do. And I often use the example of what I call the 10,000 hours to becoming a master. It typically takes about 10,000 hours in any particular field to become an expert at it. And I'm about the 9,000th hour at this point. So I've actually calculated this over the last 7 or 8 years, and I'm pretty darn close to 10,000 hours on this. So in putting together the consistent profitability steps, I think that it's critical that if you are going to find the right mentor and become a sponge, this person, he or she, should be able to cut your learning curve down significantly. So if you are looking to hire a mentor to teach you how to trade, and you know, everything from our students and some of the folks in our trading room that I mentor, we start from scratch. We go through the entire process of software setup. I give them all of the definitions to my custom charts that I've built over the last 6 years. I teach them how to read market profile, the footprint, all of the different types of support and resistance things, whether it be Fibonacci, Bollinger Bands, Keltner channels. All that is already there on the screen. If you guys go into the daily charts section of my webinar and see my daily commentary, you can see most of what I've put together each day is all you need to trade the contracts you're looking to. So in most cases, we'll start a new futures trader off, or an unprofitable futures trader that's maybe blown out a number of accounts off, trading the ES, which is the S&P 500 E-mini contract. It's awesome. There's tons of volume on it. It's one of the most liquid contracts on the planet to trade. And it has excellent volume data coming from CME Group into the software on it. So we'll walk you through setting up melted delta, to chart recognition patterns, and most importantly, trading the setups. So we'll teach everything you need to learn to be a proficient at seeing where to trade. But again, with the footprint chart, you really need to fine tune it to the patterns that show you when to trade. And a lot of our students, the key thing is repetition. The one thing I love about either the IRT Linsoft program or Market Delta software is you have the ability to go back and review. So each weekend, which I'm actually going to be starting to shoot some videos on that once I've mastered this Camtasia Studio product, I'm going to be going through a weekend review of the entire previous week of both the ES, the 6E, and the oil contracts that we trade. And I'll give everybody an overview of what we did. But the consistent profitability component is really just not having a bias. I set a lot of that stuff in place because I want to know what the market's done. I want to be able to see the context of what it's done, but I do not want to fight the market. I don't want to create a bias. Occasionally, you'll see me on Twitter, and certainly in the room, I'll step in front of the market just like a train coming down the tracks. And in many cases, I've seen this type of pattern before. I'm not afraid to step in front of the freight train because I know that more than likely it's going to hit a fat brick wall. But, I try to focus on being right. I don't look at P&L. Even to this day, it's great. I kind of have an idea where it is. I mean, it's not necessary that I look at it. But that kind of dovetails in with number 5, which is risk. And I always advocate being conservative. So most of the people I've seen that come to us for coaching and mentoring, at whatever level they're at, the mistake that they've made is they're too risky. They put too much leverage out there. I think the mistake a lot of these brokerage firms put out there, and certainly can be just really dangerous to a new trader, is just too much leverage. If you have a $10,000 account at Amp Futures or wherever, Mirrors or any of the big names out there, you really have no right being in anywhere between 10 to 20 contracts. I think it's just ludicrous. And it's a great way if you take a couple of big fat losses to get that 10 down to $5,000 in a flash. So risk is everything. And we go through specifically when we execute trades with new students how to execute it, what the dome should be set up like, what your particular strategy should be set up in the dome, where the stops automatically win, where the scales automatically get set up in the dome. And then the beauty is with the profile and the footprint chart, you can move those, what we call scale outs, up and down the chart depending upon where you're looking to take profits. So you want to be flexible. So, we go through a lot of trade analysis with students. So I think that risk is probably one of the most important things behind commitment in any of the elements to getting yourself consistently profitable. And, if you don't have a high absorption rate of information, just keep watching videos again over and over. Find the right people, ask them tons of stupid questions, just like I did, in early 06 when I basically grabbed 2 really smart guys and I shook them upside down so they could teach me everything they knew about market profile and how to trade the futures markets. And I offer that same to our students as well. Actually, we have a new quarter starting here, the third quarter, in about a week. So I'm looking to take on 2 to 3 new students for that period of time. And so, as you kind of go through these 6 elements, ask yourself these questions and, really be tough on yourself. Do I have the commitment? Am I positive or negative? If you got a lot of really big issues going on in your life, like divorce or, children going off to college, or you've been let go from a job, you're transitioning from one employer to maybe a consulting position. These are things that can really create a lot of inner monkey type turmoil in your head. Maybe it's not the right time for you to take on the type of commitment of learning to trade. So, and with a lot of our students that come on board, I typically only personally coach, I don't know, anywhere between 2 to 3 students a quarter. But over the last year, I've had to turn a number of them away because they weren't ready. They probably didn't want to hear it from me, but in many cases they just weren't ready. They didn't have the time to put the commitment in. But it's like anything else. If somebody told you I can teach you over the course of the next 3 months the processes to put in place, as long as you have the dedication, that could potentially make you hundreds of thousands of dollars a year in income, is that worth it? At the end of the day, let's face it, that's why we're all sitting in front of these screens. Some of us as traders may like the power of trading, they may like the thrill of it, but I would think at the end of the day, the vast majority of us, it's all about making a ton of money. And, these elements can get you to that point, provided you find the right type of instruction and you put the right type of dedication into it. Okay, let's move on to a little bit about what's going on in the market. This is a chart of the S&P 500 from the lows in March of 2009 to the present day. We have seen a ridiculous rally, in my opinion, that has mostly been fueled on federal money printing, which has really no other place to go but into primary dealer accounts, thus creating lots of places to put money, and it has fueled the rally in everything from commodities to currencies to the indices around the world. And I think at some point the musical chairs is going to stop. So the question of recent, and a lot of the Fed governors that have been speaking for and against the continuation of quantitative easing, or QE, has really turned into a sounding board. And it's really roiling a lot of markets, and this coupled with a lot of the central bankers' moves, not only in Europe but certainly in Japan, which is creating serious volatility in this carry trade. Some days it's risk on, it's risk off, but all in all, we have not had a significant correction since June of 2011. So every time you have a bit of a pullback and then you race to new highs without spending any quality time balancing or building a proper base, you run the risk of having what's called a shooting star top, which the peak at 16 may very well have been that. It doesn't mean we can't go back up and test the high again, but I think at some point we really need to see a fairly significant correction in the market to bring the health back into this big movement off the bottom. Now, as you probably can tell from this, I'm generally in this particular last 3-4 years move, I've been pretty, I think it's unsustainable. So, call me bearish at the top here, but I always try to be agnostic on my bias towards the market, because I want to trade what I can see, because I can't determine what the market's going to bring me. So we're at about a 5, 6, and 7% correction if you include all the way to the bottom of today. I don't know where it's going to take us. The 1520 level on the S&P and certainly the 1480 level are big areas, as you can see on this chart, and they could bring, probably pretty quickly to, that would be almost a full 50% retrace of this bounce off of the summer lows in 2011. 50% retrace puts us about somewhere right in the 1400 area. Looking at
It's possible. I mean, it would be healthy if we were to get back down to this level, and more importantly, spend some time basing at this level before we potentially came back up and took out the highs. This is all only predicated upon the fact that the Fed continues on its course. If they signal, especially Jackson Hole coming up in the fall, if they signal that any QE is just going to start to be pulled back, I think you're going to see a much more significant correction. Because if you look at a lot of the volume on this entire way up since March of '09, it's come on much lower volume. And especially up around these areas, it's been on real hot air. So that's just a quick long-term view from me. Take it for what it's worth. Understand market factors in force with volume, because if you get a clear feel on that, it can really help you, understand what's going on and take a look at the context of the market. So, all right, so let's go ahead and move into the Q&A. I want to keep this, between 45 minutes and an hour. So I typically like to leave a fair amount of time at the end for Q&A. So if you would please, Eric, can you maybe prioritize what questions we have and so forth? I'll go ahead and read them and then try and get them answered as well. Okay. First question talks about the daily charts. Let me pull that screen over here. I'll show you how that is. If you go to our home page, best way to do it is to go in and click on the members access area at the top of the website. It'll bring you to the members section, and there are a number of products we offer. The 16-part training course, we're actually in the post-production of that. It's taken a lot longer to shoot these videos because I don't know how to work these video editing things, so I've had to sort of learn all this, and so has my partner Eric. But the group training classes, which is really just a private mentoring, you could take a look at any of these products. Your question was about the daily markets, so I go in every day at the close of business, and I post a chart for the next day. And depending upon what's taken place in the market, I will go in and make some commentary about what I see going on, and then I'll post the charts. I give you a feel for the direction. I almost always post the long-term composite every day. These are awesome because it's data all the way back for a few years, and it shows you a lot of the balance areas that's been going on in the market, as you see here. Or let me just increase this screen a little bit. There we go. So this particular composite is on the ES. It's a long term. You can see that both these peaks and valleys is represented not only by the mountains, but by the red and green lines on here, or better known as HVN and LVN lines, both high and low volume nodes, are excellent places on your daily prep to look to see where the market has been. Where's it gone? Where's the point of control for the balance area? You can glean a mass load of information off here about volume that's executed on the profile over any given composite. So whether it be just a composite of a particular balance area like at the top here, or of the entire move up off of the lows of March of '09. So we have some thin areas of volume under here that you can see, in thin areas of volume here that the market traded through. So we spent, obviously a long period of time, almost 3 months in balance up here, and then we had a move out of balance back down again. A lot of it having to do, obviously, with the unwinding of the carry trade and a pretty heavy risk off attitude among a lot of the global funds. So that's, in a nutshell, the composite. I also walk through the actual numbers for the next day. So you can see for the June contract, we go through the value area highs. We post what's called singles. These are places where other time frame players are present. If you guys are not clear on some of the acronyms or some of the terminology that I've used, I definitely would suggest going to the website and just clicking on the resources tab. You can drop down and take a look at the trading terms page, which is right here. We've really put a pretty exhaustive amount of information on here about getting you educated on market profile and the footprint chart. But just looking back at the daily charts, it's put out typically around, and I do see your question there. It's put out typically anywhere between 5 to 6 o'clock Pacific time. So I do it a little bit later in the day, which is obviously moving into the evening. Obviously, for folks in the East Coast, or certainly much later in the night if you're overseas in Europe. Okay, any more questions? Okay. Okay, any more questions? Okay, fair enough. The daily trading homework sheet that you guys hopefully had the opportunity to download once you signed up for the webinar. If not, we can certainly get you that link. Just send me an email if you wish. But this is an awesome sheet that I put together a number of years ago. I still use this every day. I fill everything in. So we want to know what the day type was yesterday. And again, that's a market profile thing. We import the numbers from the daily email, which is actually I've automated. So I actually put that in my nightly updates so you have all the important levels and stuff. We want to look at the open type, obviously, as the market opens, direction of trade. All this stuff helps answer that context question. Obviously not as much related to using the footprint as the when to trade. This is more of the where type stuff. So looking at overnight inventories, reviewing numbers. You can look at this for either contract or whatever contract you want to use. The daily trader checklist is also key. These are the questions that you're going to be continually asking yourselves as you move throughout the day. What is the market doing? And the key thing is you have to ask the conviction questions. You've got to ask, are we trending? Are we balancing? Are we bracketing from one time frame to another in some sort of monster move either way, which obviously goes along with the trending. All these questions continue to help keep you on the track of just basically taking pullbacks in a larger trend. So whether that trend be a 1 minute or something as long as a daily trend, depending on your type of trading, I'm usually looking at a 5-minute chart. So let me just switch over to the system here, and hopefully you can see that. With the trading homework, these particular levels that you see automatically come across on the charts, which is one thing I love about custom programming that you get the ability to do and to fine tune in Market Delta or IRT software will allow you to make these changes too. But if you guys are interested in with the, and I know that's the next question, how do I get more information? But if you're interested in the the mentoring that we do, I can show you that sheet as well. Just bring that into the viewer here. Hopefully you guys can see this. The diagram for consistent profitability is on my website. The steps to get there are not. This sheet is typically sent out when somebody shows some interest in the consistent profitability coaching steps. So if they want to do the full package mentoring with me, and as I mentioned at the beginning, I typically take on 2 to 3 students a quarter. This is really what we go through, and we want to see the different steps, obviously. But the key thing is breaking this down into segments, and as we're producing this for a product, we're actually going to make these, and I'm not sure how many different videos there's going to be, but I've got it pretty fine-tuned where I think I'm probably going to shoot maybe 10 different hours of individual segments each, and it will go through specifically the training of all of the steps. Probably take a couple hours to go through each of these, but we're going to offer that package as a whole. If somebody just wants to see the coaching versus actually being a student, they'd rather just purchase the product and watch it on their own. The important thing here is the repetition. Being able to consistently perform all of these while standing on your head will get you to the consistent profitability. Before
before I forget, guys, we keep looking at this particular screen here. We've got a 15-day free trial if you guys want to take a shot at looking at my daily updates and charts. Good stuff in there. Save a lot of time in morning research if you'd rather just take a look at what I do. Typically takes me about an hour or two to compile all this stuff. The trading room is something we're in every day. Me and the folks in the trading room just really going in and hopefully keeping everybody out of trouble. But the trading room is critical because it's really a place where I can point out all the things that may get you in hot water as far as taking the wrong trade areas and being able to utilize the footprint as well. So if you guys want to take advantage of that stuff, you can just click on our homepage or the links in the webinar here that are put in as well. Any other questions? I wanted to keep this to about an hour. Do want to drag this out. I encourage you guys, if you want to, just send me an email. It's just Steve at FX Trader if you've got any questions or you want some help with something. Like I said, I'm in the Pacific time zone now in SoCal here, so I have some time in the afternoon, and that's one of the big reasons we put this website together and started our 4-part series and the trading room and all that fun stuff, is to try and get folks on a path to consistent profitability. And hopefully that's my greater pay it forward calling here. But any other questions? Jeff, if you would just go to marketdelta.com and click on education, and I would suggest for everybody to just watch all those videos there. They are going to elaborate in much greater depth on the footprint. So the key thing is learning the 3 patterns on the footprint: a continuation, a reversal, and a chop pattern, and then being able to distinguish where all the volume nodes are showing up and so forth. That will give you, but it's like anything else. It's you're really going to learn it in practical live applications. So just going through, and again, my for the other question I see here, mine is it's a point and figure 5-tick reversal, so it's very easy to set up. I can show you guys how to set all that up if you want to jump in the room for a 3-day trial, or you have any questions, just send me an email. Any other questions? Every day, Kevin. Every day. So 5 days a week, you'll see review and analysis on the markets. Okay. Well, if there's nothing else, I want to thank everybody for joining us. This webinar video will take a couple days to produce it, get it uploaded onto YouTube. We'll embed the link on our website and send out an email to everybody that either had the opportunity to stop by today if you want to watch it again, or if you guys want to you haven't had a chance to get to the webinar, you just want to see it for the first time, all you just basically go to the webinars tab on the website, and you can watch either the market profile or today's the footprint of the 2 that I have. We have 2 more in a 4-part series coming. We'll get a little more in detail down depending upon time frame. I have no idea. Probably sometime maybe after the 4th of July I'm going to shoot the 3rd webinar, so we'll let you guys know. Have a great afternoon.